What's up, YouTube? Welcome back to the channel. And today we're going to be talking about using Charles Schwab's stock screener to kind of do some of that market research for you and kind of automate how you find your stocks. So, once you have your Charles Schwab account set up, you go to Research and then you click Research Tools and it'll bring you to this page. And then we're going to go to Stock Screener, so you left click there. And this is what it's going to look like. Mine's a little different since I already have some pre-populated screens, but it's going to look basically the same. And what you're going to do first is click Create My Own. And now we're going to start creating a stock screener criteria. So over here on the left hand side is where you're going to go and select all your inputs. Basic, you'll see, market capitalization, what kind of stocks do you want to screen for? Are they small, micro, mid, large? You can screen by sector, the 11 sectors of the S&P, and then all the different subsectors and industries within that. You can look to see, is it trading on NYSE, NASDAQ, or is it OTC? Then you could also look and see, is it in the Dow, the S&P 500, S&P 4, S&P 6, or Russell 2000? And then if you go to dividends, you can do some dividend screeners. Good ones here, the annual dividend yield, the payout ratio over the trailing 12 months, payout ratio of the 5-year average. You can see have the dividends been increasing or decreasing year over year, and then you can also screen for the 3-year CAGR, the 5-year CAGR, and the 10-year. Analyst rating, I don't really use this one too often. You can see what analysts think about the stock. I find this not to be very helpful, and a lot of the times it'll just be noise and get in the way of your trading criteria. So this one is not an important part of what I'm looking at. Company performance. This is a good one if you want to try to find growth stocks. You can screen for revenue growth over the last 3 to 5 years. You can compare the most recent quarter to the quarter a year ago. You can do the current trailing 12 months versus the trailing 12 months from a year ago. Or you can do the most recent financial year versus the prior financial year. Estimated revenue growth, again, this isn't very important to me because, like I said, for the analysts, these numbers have not happened and these are all just opinions. It's one thing to trade off your own opinions, but trading off other people's opinions is never a good idea. And then EPS growth, same thing as revenue growth. You can compare the last 5 years, 3 years, most recent quarter, trailing 12 months, most recent financial year. And then same thing on these estimates. I never use those. Price performance, this is a good one. You can see how the stock's been acting year to date over the last month, 3 months, 6 months, 12 months. You can compare your stock to the S&P. You can compare it to that industry, and then you can see the total return. The one that I use the most is percentage below 52-week highs. When you're doing a momentum trading strategy, you want to be trading stocks that are making new 52-week highs, and in order to get into those stocks that are making new 52-week highs, you have to buy them when they're in a consolidation period just below that 52-week high. So that's what I kind of look for, and we'll get into that a little bit more. Valuation, if you're into this kind of stuff, if you're doing a fundamental screen, this could be helpful, but I don't really find this to be of any value. Financial strength, this could be a good one if you're, again, looking at those dividends. The ones I like to look at are debt to equity and return on equity. Some of these other ones may be useful, but not something I really use. And then technicals. This one, technicals is good, but I think you should start with your kind of basic screens and then go look at your own charts to find out if the technicals are lining up with what you are looking at. So that's kind of how you use the basic screening tools. And none of this really matters if you don't know what you're screening for. So I'm going to kind of go through what I screen for. This is a large cap technical screen. So what we have in here is I have the market capitalization and I hone in on the large caps only. And then I go to sectors and industries. I like to see what sectors and industries are meeting my scans. And then for the exchange, I just have it so no OTC stocks are selected. Next up, we go to the company performance. So I like to look at the most recent quarter versus a year ago quarter, and then the trailing 12 months versus the trailing 12 months 1 year ago for the EPS growth. We're looking to buy stocks that have above average earnings, and also then take that to the charts. So I screen for the earnings. You want to have the fundamentals align with the technicals that you're looking at. So that's why if a stock is increasing its earnings, theoretically the price should also be increasing. And then price performance, want to look at year to date and last 3 months. I like to trade stocks that have a year to date change above zero, and then the price of the last 3 months has to be above zero. And then this is where I talked about that percentage below the 52-week highs. If you read any of Mark Minervini's books, he talks about how important it is to be screening for stocks that are making new 52-week highs. And after they make that new 52-week high, when they eventually pull back, which all stocks do, we want to make sure they don't pull back too far. If they pull back too far, there's going to be a lot of overhead supply, and that makes it hard to, really buy a stock that's going to excel and keep moving higher. So that's why I like to keep the 52-week high percentage below the 52-week high to about 35%. I think that's a safe number to use. And again, it allows for some room for these higher beta stocks to really pull back and still have a consolidation that meets, the technical criteria that I'm looking for. And that's it. It's a pretty bare bones screen. The screen isn't here to do all the work for you. You don't want to treat the screen as, I see a stock that pops up on the screen and I just instantly buy it. That's not what you want to do. You have to align the screens with the technicals. So what I do is I'll go through all these charts, and like Melly, for instance, I'll come over here and I'll type it in, and I'll see how does that line up with what I'm screening for. So looking at Melly, it's pretty extended on the daily, and this is not really something that you want to be buying. Like I said, you want to be buying out of a healthy consolidation period, and you need to wait until the stock stops going up and starts trading sideways. So that's a quick down and dirty on how I use the Charles Schwab stock screener to kind of do some of the research for me. If you have any questions, feel free to put them in the chat.